we've seen the advent of the robo-advisors. We've seen growth in that kind of digital-only model. At the other end of the scale, we've seen growth in terms of the family offices. So again, if you look at the traditional wealth management organizations, there's competition from family offices, there's competition from the kind of robo-advisors, and in the model where they're not able to deliver the experience or the products and services that's required, that's meaning assets are flowing away from the traditional wealth management firms to the competition. And again, in our report, we quantify that as something like 1.5 trillion of new assets that have moved into that competitive sphere. So there's an opportunity, but obviously there's clearly a threat as well.
Welcome to Merryn Talks Your Money, the personal finance edition of Merryn Talks Money. In these bonus podcasts, we talk about the best strategies for making the most of your money. I'm Merryn Somerset Webb, editor-at-large for Bloomberg UK Money. So this week we are talking about who is getting wealthier and where, and how those people are reshaping the wealth management industry. What do they want from their management teams that they didn't want a decade ago? To talk about it, we've invited on Gareth Wilson, global banking industry leader and executive vice president of IT services and consulting group Capgemini. Capgemini recently released its 30th edition of the Institute's World Wealth Report. We talk about the growing appeal of alternative assets, the focus on diversifying portfolios. Stick around to hear more about this and about whether what you want from your wealth manager is excellent returns or empathy. And Gareth, hi, thanks for joining us today.
Thank you, Merryn. Great to be on Merryn Talks Money.
Right, now we are talking about rich people and very rich people. So before we start, because what we're going to do in this podcast, we're going to talk a lot about high net worth people and ultra high net worth people. So can we just start by defining what we're talking about? Who is a high net worth person? What do you need to have to be referenced in this report?
So high net worth individual is an individual who has investable assets that's greater than $1 million, Merryn.
Okay, and investable assets is everything except for your house?
Everything except your house. Everything except your house. And if you've got investable assets between 1 and 5 million, we refer to you as a millionaire next door. If you've got assets between 5 and 30, we talk about you as a mid-tier millionaire. And then for the bracket of individuals who have assets or investable assets of greater than $30 million, high net worth individuals.
Okay, hang on. I've got to have a lot to be a high net worth individual.
You do.
And
Ultra high net worth individual, sorry.
Okay, so everybody here is a high net worth individual.
Yeah.
An HNW, but only those above, what was it, 30?
30, ultra high net worth.
30 ultra high net worth. Although 30 is not going to get you much these days, is it?
Well,
I mean, by the time you've got a holiday home and a boat and all that.
Well, and that's the interesting thing that we're seeing, Merryn, the growth in terms of that population. So when you look at that full high net worth individual population, I think we're talking about 25 million people globally, and we've added, when we look at the year 24 versus 25, we've added 2 million additional high net worth individuals. So the population is growing, but their absolute wealth is growing as well, Merryn. And it's growing at the fastest level when we compare 2024 to 2025 for the last 5 years.
Interesting. Have you got any analysis of the bit above that, like anyone over 200 or how many billionaires, etc., or are we kind of stopping at 30 for the purposes of this report?
We've captured that ultra high net worth individual segment, if I could describe it that way, Merryn, as above 30 million. So we haven't looked at bands within that. However, when we look at that group as well, it's something like 1% of those total high net worth population, and they own something like 35% of that total wealth. So there's a real concentration at the top of the pyramid. So 1% represents 35%. So there's really individuals there that meet your definition at 200, 300, 400 million plus.
Okay, so where is wealth growing the most? I mean, I think we probably all would guess that it's the US, which is where we're seeing the highest number of people entering the high net worth equation and growing the fastest.
Yeah, exactly. Again, based on our Capgemini analysis in our World Wealth Report, when we compare 2024 to 2025, something like 10% growth in terms of that high net worth individuals in the US, and that was growing the fastest globally. Um, Asia Pacific was also pretty positive on that basis. And then when you looked at Europe and the UK, still growing, Merryn, but in less positively. And then probably the Middle East was one example when we compared 24 to 25, where actually we saw a decrease in terms of some of that both population and wealth. But the US leading the way, followed by Asia Pacific.
Okay. And if you look at Asia Pacific, we'll come back to the miseries of Europe shortly. But a lot of that presumably was based around the extraordinary rise in the South Korean stock market.
It was, yeah, indeed, yeah. We're seeing positive trajectory on that basis. And interestingly, to your point, Merryn, for these high net worth individuals, we also saw equities become more important in their portfolios. So, the stock market increases that we saw were certainly driving a proportion of that wealth population and wealth growth.
So when you look at who's growing wealthier where across the world, you can pretty much see the correlation with domestic stock markets.
You can.
Which is interesting because it suggests that most places have a fairly hefty home bias.
Yes, yeah, very, very, very much so. And we saw a little bit of a movement away from some of the more conservative asset classes. So where we saw equities increase by something like 3%, we saw cash reduce by 2%. So some of that kind of,
Yeah, I'm always interested by, when I look at your charts every year, I'm always interested by the extent to which the high net worth people keep so much money in cash or cash equivalents. I mean, it always knocks around pretty substantially over 20%, 23, 24, 25%. And that seems an awful lot of your assets are holding cash or cash equivalents. I mean, I'm pretty sure that if you looked at mid-ranking wealthy people before they quite get to your millionaire next door, they'd be holding much less of that in cash or cash equivalents.
Yeah, I think you're right, and I think it's we always use it as a little bit of a barometer in terms of risk appetite and conservatism, and in markets that are growing, where individuals see greater value in terms of stock and equity markets, they're obviously taking on a greater risk position. Fixed income, we also saw increase when we looked at 24 versus 25, Merryn. So again, by something like 2 percentage points. And interestingly, alternative investments, we saw a little bit of a decline. So there was a move away from some of the alts into fixed income and equities. But I think, to your point, I think those high net worth individuals were really following where they saw the performance and the value in 2025.
And when you say alternatives, what do you mean? You're talking about private equity in the main, private equity, private credit, etc.
Private equity, private credit, some of the hedge funds, and again, not all of those investment asset classes are available to everyone, and I know you've discussed this in the past in terms of both, the liquidity associated with private assets, but also in terms of accessibility. But again, I think that's that breadth of asset class and those breadth of investments is something we're seeing greater appetite for.
I was interested to see that 2/3 of your respondents said that they were interested in increasing their exposure to private equity, which seems to me so slightly extraordinary at the moment when it hasn't been a great performer and there's an awful lot of debate about the extent to which its historical record of outperformance is real or not, but still everyone says they want more of it.
I think they want more access to it, Merryn. That's not necessarily going to say they're going to commit, but having the option. And I think this, for high net worth individuals, access to products and services is a real driver, and the ability to kind of diversify your portfolio, whether it be in terms of asset classes or also geographically. Again, I think you and I have touched on this in the past. We've seen high net worth individuals want to diversify into different markets. We've seen significant growth and attraction in Asia and the Middle East in the past. So I think to your point about 2/3 of our respondents wanting to have access to the alternative investments, I think that's true. Whether or not they'll commit is dependent on that point in terms of where they see value and where they see growth.
And what about crypto? And one of the things that you talk about in the report is how important it is for wealth managers to be able to offer their high net worth investors access to all investment classes. And crypto, again, is that a class I'm loath to call it an asset class, to be honest, but is that a group of possible places where you might put some money? How about that? Investors are more interested in now.
More interested is kind of a subjective statement, but again, I would put it in the same class as alternative investments. If your wealth manager can give you access to digital assets, to crypto, and they can do it through a platform that's easily accessible, then I think that is kind of meeting these high net worth individuals, their expectations, and giving them the option to choose that within their portfolio. Whether or not they take that decision, I think, is a different point.
It's a different matter. Yeah. Okay. So one of the things that you say in this new report is that we are at your words, clear inflection point for the wealth management industry. What does that mean, and why now?
So I think the inflection point, I think that's probably founded on 3 points or 3 perspectives here, Merryn. I think the first point I would say is just this growing wealth. And I think, we've seen this trajectory over 30 years. Actually, we've been writing this report for 30 years, which, makes us all feel a little bit dated, but,
the wealth. Dated but expert.
Dated but expert, indeed, yeah, experienced. But I think, the wealth management industry obviously continues to grow to service this growing population. As I say, it grew by, 7.8% globally in 2025. But also the expectations of those individuals, and we started this conversation by defining high net worth individuals. The expectation is that we can bring a very personal relationship, a very personal experience, and that it can be, we can also bring the breadth of products and services that those individuals require. So I think there's a real kind of call to action for the wealth managers to move away from some of this kind of standard wealth band segmentation to bring very kind of personalized products and services.
Why?
And then I think the third thing... I
have to interrupt you there and say why. Because most people, as far as I see it, most people, until you get up into your 30, 40, whatever $1 million band, most people require the same things from their wealth manager. They don't mind this. Some talk in your report about the importance of empathy-led advice, and I can't think of anything worse than my wealth manager giving me empathy-led advice. What I'd like him to do is to make me absolute returns in excess of inflation every single year without making a fuss about it. And that seems to me that is what everybody wants from their wealth manager, not endless communication and empathy and complicated portfolios. What am I missing?
I think we might have to agree to disagree here, Merryn, because I do think that model where success is purely based on performance and is purely denominated by your annual portfolio review is not the expectation in terms of the pace with which the markets in the world is moving. And I think high net worth individuals want to have the ability to be able to optimize products and services on a very kind of timely and a very real-time basis.
What does that mean, Gareth? What does that mean? I mean, optimize products and services on a real-time basis. Surely you employ a wealth manager to manage your money without constant reference to you. Because it's a delegated activity. But the way you seem to be looking at it as though it is a non-delegated activity, but more of a regular conversation. In that when we've talked about wealth management on the podcast, what we do is we say to people, look, if you don't want to manage your own money, get some guy to go do it for you. then you can sleep at night and you don't have to think about it. So is the suggestion here that high net worth individuals are changing from that idea of I give my money to this guy or woman and they're going to take care of it and I don't have to do anything, I can sleep at night because I know this guy's a pro and he's got it under control? What you're talking about seems to be a regular communication that involves empathy.
Well, I think there's definitely the need for more of a kind of a proactive and regular management of your portfolio. Now, I suppose the point I'm making here is if you want to delegate that and leave that on a 12-month schedule, then that's obviously one requirement. However, I think there are individuals who want to have opportunities to present it to them in a very kind of immediate fashion. So as things are changing, whether that be changes in the market, changes in the geopolitical situation, changes in terms of their kind of personal situation, Merryn, they're looking for their wealth managers to be proactive and to predict what's required based on their requirements and objectives and intervene on that basis. So I think we are seeing a demand for a much more active relationship rather than a periodic relationship. And also I think this idea that we're operating in a very kind of real-time environment. You know, you and I have become very comfortable with the immediate experience, the real-time experience of, you know, being able to order on Amazon and it being delivered within, you know, X number of hours if required. Again, I think in a wealth management context, Merryn, clients want to have that level of insight. They want their wealth managers to understand, you know, their expectations and their objectives and to respond on that basis. And the other thing I would say from our analysis, Merryn, we've seen if you're able to provide the level of personalization that we're talking about here, what those individuals will recommend you to their peers and to their friends.
Even if you're charging more than the robo-advisor down the road.
The other dynamic we're seeing is individuals are having multiple relationships with their wealth managers. So 5 years ago, 6 years ago, in 2019, something like 40%, 39% of all individuals had a relationship with one wealth management organization. When we look at that figure now in 2025, that's reduced to 19%. So my point is, Merryn, individuals are looking towards multiple organizations to provide access to the products and services
that's one of the numbers.
Need.
That is one of the numbers that jumped out at me as well. And you know, I think you may look at that and say, well, maybe they're not satisfied with one, and so they're moving to another, to another, to another. But doesn't that slightly argue against the idea that you want a personalized, empathetic wealth manager? Because if you have 4 different wealth managers, they definitely do not have oversight of your full portfolio or of your full lifestyle, because you've got 3 other guys as well who are doing something else. And if you want that personalized, empathetic, one-on-one, understand my family, understand my generational shifts, understand my wealth, understand how I feel, etc., you'd want one wealth manager. This is like having 4 therapists.
The counter argument to that, I would say, is that if you can provide the full breadth of products and services that's required under a single umbrella, then I think you can maximize the strength and, quite frankly, the stickiness of that relationship.
Yeah.
So
okay, this shift represents the failure of the industry.
I think this shift represents that demand from clients for a greater personalized relationship with empathy, and also a greater access to products and services, because no one firm has been providing that. And we've also seen, Merryn, to your point, we've seen the advent of the robo-advisors. We've seen growth in that kind of digital-only model. At the other end of the scale, we've seen growth in terms of the family offices. So again, if you look at the traditional wealth management organizations, there's competition from family offices, there's competition from the kind of robo-advisors, and in the model where they're not able to deliver the experience or the products and services that's required. That's meaning assets are flowing away from the traditional wealth management firms to the competition. And again, in our report, we quantify that as something like 1.5 trillion of new assets that have moved into that competitive sphere. So there's an opportunity, but obviously there's clearly a threat as well.
Yeah, and you're forecasting the highest growth rates for the robo-advisors over the family offices, which makes sense because the lower base, etc. But that is where you're expecting to see the growth.
It is, but again, you've got to look at this at an individual basis because again, when we look at those, ultra high net worth individuals with investable assets of greater than 30 million, the role of the family office, not just the financial services that they're bringing, Merryn, but some of those non-financial services around estate planning, inheritance likewise becomes increasingly important. So when we look at products and services, of course, we can talk about asset types, we can talk about crypto, we can talk about alternatives, but I also think there's a role for the wealth management firms here to bring those broader services to bear, again, in a way that's directly relevant to their clients.
Yeah. Okay, so most Merryn Talks Money listeners, I think, are probably at the top end of your millionaire next door, maybe the bottom end of your millionaire next door, or maybe soon they'll be your millionaire next door. What should they be looking for in a wealth manager?
I think first and foremost, I think they should be looking for performance. So a wealth manager that gives them the return that they aspire towards in terms of their objectives. I also think they should be looking for a wealth management firm that gives them access to the products and services which they believe will be relevant for them and their family going forward. And then the final thing I would say is a wealth manager where they don't have to repeat themselves. So, part of our analysis suggested that individuals, 42% of the individuals in the high net worth that we interviewed have to restate their objectives and requirements. So, can you have a relationship with an organization who hears your requirements once, understands them, and actively manages those going forward? This idea of personalization, but also access to products and services.
Yeah. Well, I guess a robo-advisory you'd only have to tell once.
Indeed. And also, a robo-advisor can take advantage of some of the artificial intelligence data and information that's increasingly available to optimize that relationship, Merryn.
Well, I suppose that is one of the questions. I mean, if we're thinking about how do you find a wealth manager, what are you looking for in a wealth manager? The questions you're going to ask are, talk me through your performance and show me how that works relative to the performance from other wealth managers, which I know is information that is not always easy to get hold of. And then what products and services are you providing? Can you show me the whole suite? And outside actual products, do you have a tax advice, et cetera, legal environment department? And then maybe this last question is, can you explain to me how you are using AI to enhance your productivity?
Yeah, well, I think a lot of that is focused on that role of the relationship manager, which is still a very key role across the industry. And again, when we looked at the relationship managers that we met, and we talked to, I think we talked to something like 1,300 of them as part of our report, Merryn. Still about 40% of the activity they consider as operational, so administration. Can you use AI to somewhat automate that, and then ensure that the relationship managers are spending their time truly invested in their clients and their clients' wealth and their clients' portfolio? So, using artificial intelligence around things like know your customer, some of the tools and techniques around managing meetings and some of the kind of communication on that basis, and portfolio optimization. And I think we still believe the relationship manager is key. And even in the world of AI, Merryn, we still believe there's a role for the human element, the human judgment within the wealth management industry, and that relationship. So using AI to support the relationship manager, but also using AI to understand more about you as a client. What do we know about Merryn and the things that she's doing beyond
Merryn wants to make 2 or 3 percentage points above inflation every year and not be bothered. That's what
once?
Merryn wants. And I still think that's what most people want.
Well, I think, what we're talking about here will hopefully not only meet your expectations, Merryn, but exceed them.
Okay, excellent. Can I ask you one last question before we finish, which is about family offices? I mean, we're seeing the rise and rise and rise of the family office. How much money do you need for that? Obviously, I'm not talking about single family offices. So I'm sure some of my listeners are rich enough for a single family office, but a multiple family office, or to get the kind of service you might get from a family office type organization. Which bit of high net worth do you need to slot into for that, and where do you start?
Well, I think unfortunately, Merryn, it's not the millionaires next door. Unfortunately, it's not the millionaires next door. So I think, in that bracket, when you're getting sort of north of 5 into the kind of 30 million region, that's when you and your family will be relevant on that basis. But again, I would come back to understanding truly, what you want to achieve. Um, I think, we've seen with the advent of, entrepreneurs. So, there's a lot of wealth that's been generated through entrepreneurs and, the transactions that they're successfully executing with their respective ventures and businesses. And again, a significant amount of wealth generated quite quickly also lends itself to that kind of family office
Yeah.
scenario.
Yeah, there'll be a lot of excitement around in the wealth management community about the mega IPOs, right?
Of course, we
Yeah.
got, Anthropic on the was on the books, and SpaceX. I think and when we looked at what was generating wealth previously, we talked about those equity markets, we talked about stocks and shares, and I think it continues to be a significant part of the growth that we've seen over the last 5 years,
Yeah,
Maren.
and it will be, I'll tell you what, when we next have this conversation, we tend to have it every year, don't we? When we next have this conversation, we'll know a lot more about how the young, particularly the newly rich young, like to have their money managed, and what kind of wealth managers they're after, because assuming something doesn't go horribly wrong, which of course it could, there will be an awful lot of newly rich, relatively young people, presumably delegating a lot of their money management to the wealth management industry. So we'll know a lot
Nope.
more in a year, won't we?
We will, and I suppose my prediction is they will definitely want that level of
Empathy.
uh, empathy and personalization that we've talked about, Maren. But also, I think they'll be demanding in terms of the kind of products and services from the wealth management industry and their relationship managers.
Yeah, well, it's fascinating, and we will find out. Gareth, thank you so much for joining us today.
Pleasure, Maren.